Welcome to Eric Mwenda Capital, and also welcome to 2021. It's the 2nd of 2021. A very good Saturday. Yeah, and today I was just observing the website, the Family Wear website. You can order your match here, the Eric Mwenda Capital match, at familywear.ericmwendacapital.com. Yeah, don't forget to pass by our website. Yeah, we offer some good analysis, some good account management, and also some good I said analysis and also account management. We pause on cryptocurrency mining, but we'll be back on it. Yeah, so yeah, and also our YouTube channel, we have good content here, very educative, especially for the beginner. Yeah, it will give you insights to the capital markets. Yeah, and today we are going to talk about using the breakout strategy, and I'll be using the US dollar versus the Japanese yen, and the website which I'll be using is tradingview.com. We'll also look at it with this US dollar versus the Japanese yen, and also with the volatility indices, specifically the derived. Yeah, we'll come back to this. I'll also do a part 3 on how to trade volatility indices. So please, if you have not watched our part 1 and part 2, please go back and watch it. Very interesting, very educative, very intriguing. Yeah. So what is really the breakout strategy? We've been talking about the support, the resistance, but what is the breakout strategy? I can tell you that on this graph there was a breakout right over here from this point here, these levels here, up to these levels here. So our aim is to take advantage of this breakout and place our order so that we can profit from them. Yeah. So the first thing we need to look at is we need to look at the general structure of the chart. So I can see that this is forming lower highs. So it's kind of forming a descending triangle. Yeah, you can see it's maintaining its lower lows. Yeah, not necessarily going to lower lows, but going to maintaining its lows. You can see here. So the first thing, I'm using the daily time frame. So the first thing we're going to do is identify these levels, which are due to be broken. So I'm going to take my horizontal line, and I'm going to place it here, on this level. Let me turn it to green. Yeah, and you see on this level, yeah, if I was waiting for a good breakout on this level, you can notice that there was a good order block here, a very good order block here, which prompted me to place a buy order just right over here. So if I missed this candlestick at the close of it, I would have placed at the end of this candlestick here, or at the open of this candlestick here. Yeah. So essentially that's what breakout is. So we can see here it danced around this our support here, and then it hit it, then went back up. So it was another good area to place your buy orders right over here, and then you just wait for it. So when it came crashing down right over here, yeah, you could have placed now your sell orders, yeah, after on this candlestick, at the close of this candlestick here, or at the opening of this candlestick here, which would have given you 106.2, which would have given you 400 pips, which is 4,000 points. A dollar would have given you $4,000. Yeah. On the upside, after it has done its move, you can see a consolidation here with a slight climbing W. I don't know if you can see that, with a climbing W. line graph. Yeah, you can see this W. Yeah, we talked about the W formation, the M formation. If you're not conversant with them, please go back to our previous videos. We've talked about them in heavy detail. Yeah, so after this W, you can now place your buy orders right over here. Yeah, not necessarily even here, just right over here after retracement. Then you can wait and be patient for your orders, which will roughly give you 104.711. That's actually 700 pips. Yeah, that's 700 pips, which is 7,000 points, meaning that a dollar would have given you $7,000. Yeah, you can see it's actually quite slow. Yeah, you can't compare the volatility with currencies with volatility. Volatility indices are on another level. Yes, so again we put our horizontal line there. The reason which we've put it there is because of these points here. These points here, when it reaches, there is movement here of it going down. So we can say this is its second its first resistance point. Yeah, anytime it reaches there, go back down. It reaches there with this point, it goes back down. On this point it goes back down. At this point it goes back down. So we can tell that there is some form of resistance on this level. Yeah, so once we have identified a level like that, the next thing is to wait for it. So something like this, if I was looking for a sell position, I would actually have waited till this M right over here has formed. Then I will get in my sell position right over here. I don't know if you can see that M. Let us go back to our line graph. This M right over here, and also I can also put some trend line if you're not still seeing it. Yeah, so if I really got this order from this point which I'm placing here, from this, if I really found this graph right over here, then I would have waited. Then, since this is my resistance level, I would have waited to the same point, just in between here. Okay, in between 114 and 1148. Then that's the point I would have actually gotten to my sell order. Yeah, and then which would have given me something like 113, even 109. That's something like 4,000 points, which is 400 pips. A dollar gives you $4,000. Yeah, so you can see the M that we are talking about. Yeah, so on this point here, you can actually now place your sell orders, and on this point here, you can actually sell your buy orders. On this point, you can actually sell your buy orders. Yeah, you can see those are second support right on this level. Yeah, because of these points. Yeah. So basically, that's how we trade. Yeah, this was what we call a false breakout. Be very careful about this one. This one might end up costing you a lot. Be very careful. That's why we say we wait, and then after waiting, that's when we place our trades. So personally, I would have waited till it. We've talked about this. Sorry, we've talked about this. Let's look at another one. Let's look at this one here, our last one before we go to volatility indices. So on this one, this actually becomes our support, our resistance. Sorry, yeah. On our previous discussion, it was actually our support. Now it's our resistance. So we can see due to this point, it actually form a very good support point here. So after it has touched this point here, I can see that it went back down. So I will actually wait for it to break out completely up to this level. Then this level becomes my first take, actually my first take profit. You see, after it has reached here, it retraced a little bit, then went back down. After now reaching here, which will be our first take profit, I'll then wait for such false breakout to happen. Then after it has gone back up into buy zone, then I'll put my sell just above here. Remember this point, just above here. Then I'll short it up to our first take profit, which gives you around 600 pips. Yeah, a dollar gives you $6,000. So that's how the breakout works. You wait for it to break, then as it retraces, you place your sell orders, and also vice versa. Yeah, so let's take a look at the derivative. This is our derivative. Yeah, we talked about part 2, and part 2 we say that its behavior on this resistance line determines whether we buy it or we sell it. I personally sold it when it reached on about this point. I will attach a screenshot to show you, or rather a video to show you where I took my trades. Yeah, so we're still waiting with deriv, but we can see here it hasn't broken out. So if it doesn't break in, it's not breaking, what we do is now we go to the opposite trend, because you expected it to go up. Now because it has not broken this, then you expect it to go down, which it actually has done. Yeah, another good breakout which we talked about, but we talked about this in how to trade derivatives, volatility indices, especially V75. In our part 2 we talked about it, and we're still waiting. I'll keep you updated. Yeah, but as for now, remember our first take profit for sale is here. Remember we talked that in our part 2, with our second being here in the long term. But if at all, if it doesn't break out, or it gives us a false breakout, then we are going back up. Yeah, so just wait for it. This was just a recap of what we did in our part 2. So if you never watch it, please go back and watch it. Yeah, so it's quite slow. Yeah, it's actually the only asset class running on weekends. Yeah, it runs 24/7. Yeah, so with this there is not much to talk about, unless what is there is just now waiting to see which direction it breaks in between these two levels, 576,000 and 660,000, in between these levels. So we'll just have to wait and see. Yeah, but the breakouts of this, I talked about them in part 1 and part 2, so you can go back and maybe get informed on them. So otherwise, guys, I will inform you as the volatility direction changes, volatility 75 index changes in our part 3. Yeah, how to trade volatility indices, part 3. I will inform you of that. So anyway, guys, happy new year 2021. Yeah, make sure this year at least you know something about this volatility indices. Yeah, I actually do this. I don't charge anyone for the YouTube videos. Yeah, we only get charged if you pass by the website. Yeah, so you can leave us a comment in our video below. Yeah, or you can visit our website at www.ericmwandacapital.com, which is this one, and you can actually get a chance to order some of our merchandise. Yeah, which is this one actually. And also you can get to trade like us and learn the art of the trade, which is Forex training, and this is the Forex signals. Yeah, we charge Forex trading $500, a lifetime fee. With signals we charge $200 a month. So yeah, you can follow us on Facebook at Eric Mwenda Capital and Twitter at eMwenda Capital. Yeah, see you next time. Cheers.